Hey guys, my name is Ryan Rivera. Welcome to The Next. This is a show about next-gen disruption and forward insight in the tech space. So happy to have you. I'm joined by two amazing people.
So I'm Ahmed Ismail. I am the co-founder of Daman Virtual.
Hi guys, I'm Rob Cant. I'm the co-founder and CEO of a company called Single Source Technologies.
So today we're going to be discussing disruption in M&A. Rob has an incredible history, and I just wanted to ask you if you could maybe talk a little bit more about your background and who you are and where you've got to. So please take it away.
Sure, thanks, and thanks for having me here today, guys. So, as I said, I'm Rob Cant, co-founder of a company called Single Source Technologies. We are very focused on what we think of as next generation M&A, so applying technology to the mergers and acquisitions industry. The industry itself is even in a bad year, a $3 trillion industry in terms of money that changes hands to buy and sell companies. My backstory is that I came into M&A through a relatively traditional route, albeit through a few non-traditional stops along the way. So I had a career for about 20 years or so as an M&A lawyer. I was a partner in one of the international law firms called Freshfields. So for about 20 years, I helped people buy and sell companies. How I got there, that's a slightly longer story and with a number of stops along the way.
What did so many years in M&A cause you to take this journey as a founder? Because most people, right, when they get into M&A, they kind of stay there or they go into like a big blue chip company. But you and I, we've had a very different route, haven't we? So, what made you a tech founder? Why are you a tech founder?
Yeah, great question. I think, I guess for context, on the one hand, you could look at my career and say, once you get into law, the way that the system typically works is it's a lot of the compensation, the benefits are back-ended. So people spend their entire careers trying to get into partnership if they're in private practice. I did that for a number of years. I worked for an incredible firm, but I had always said from the moment that I entered the profession that if all I did was become a partner in a law firm, then I didn't think that I would be satisfied in doing that. I always had the entrepreneurial bug. So essentially I'm delighted that I managed to accrue all of that experience. I think, if you have that entrepreneurial bug, you can really express it in pretty much anything. And I always saw, I helped. One of the things that I really enjoyed as an M&A lawyer was I was helping people buy or sell companies that they had built. And so I found that really inspiring to see. I always liked the sort of origin story of these various companies that have been set up, and people were investing in anything, right? Mm-hmm. You can make billion-dollar industries and companies out of pretty much anything. And one of the things that I was always sort of lamenting at the time, it's like, well, I'm a professional advisor at this point. Is that it? Have I now painted myself in a corner? And actually, what you realize is that if you've got that way of thinking and I guess challenging the status quo, you can kind of apply it to anything. And in my instance, I ended up having conversations with a bunch of my clients a number of years ago, started to sort of relearn some technology which I'd got into, 20 plus years ago, and just think, hang on a minute, we're in an industry that is, as I mentioned earlier, trillions of dollars in a bad year in terms of value. The investors are attributing great value in the companies that they're investing in having next generation technology, yet the technology that they are using to execute on their investment strategies are not even current generation technology. Mm-hmm. They are from historic generations. So you've got this weird dichotomy where you're valuing forward thinking and sort of innovation, but you're not using it yourself. So it's almost like, do as I say, not as I do.
Right.
So people are, really belaboring in a multi-trillion-dollar industry using tools that they don't need to. And I find it really quite interesting when you see, an industry in M&A that is really built on the foundations of what you can call an apprenticeship model, how do people learn how to do this? How did I learn how to buy and sell companies or advise on the buying and selling of companies? I did that from my predecessors, the senior people. How did they learn? From their seniors, and then, so on and so forth, which means that innovation in an industry like that is incremental and arguably glacial, because people are not able, you're not rewarded for making changes, right? You are rewarded by being able to do what your predecessors did. So what do the good people at any point in time do? Well, they do what the good people that went before them did, right? So actually innovation in that process is not really set up as an environment for innovation. So it's kind of stifled. It's not really designed to embrace it. So then when you look at what you are trying to achieve with anything like that, it is we are ultimately trying to help people make better investment decisions, trying to do so with the greatest efficiency, and at the end of the day, they want to get the greatest returns. Can technology play a part in that? Well, one of the weird, paradigms with all of this is that you've got the senior guys who are dictating what has happened historically, but you've now got a generation of younger folk in the industry who are in their day-to-day lives using tons of technology, whether that's to order their food, book a car to arrive to work in, whatever it may be. Then they get to the office and they're not using any of this technology, right. Or they are using some of that technology, but it's not enterprise grade. They're using, ChatGPT and so on that they perhaps haven't been signed off for their enterprise use. So you've got this weird kind of almost like record scratch moment where you're using a whole bunch of modern tools before you get to the office. You get to the office, you're not using any of them.
Yeah.
You're investing in companies that are using them and you're placing great value on them. But I think that's changing. So whereas you previously had a top-down, this is how we did it, and this is how we therefore would expect to do it going forwards, so there's very little incremental innovation and change, the younger generation now are actually going to be driving change. So we think, and we've seen tons of evidence of this now, that people want to be using the tools that they know are available in other industries, that they know are available in their pockets and can use in their personal lives. Why aren't they using that as part of their sort of M&A investment and advisory and execution strategies? So, yeah, I think that's kind of how we see innovation in that space.
So explain to people, I think M&A can, whenever I mention the word M&A, most people probably don't know what M&A is, right? So, and there are, it's a huge industry that employs everyone from bankers to lawyers to accountants to the actual investment firms, the private equity firms that actually do the investment. So maybe, in your 20 years or whatever experience, can you explain what is M&A, right?
I'll give it a crack.
Have a go.
Okay, so M&A, let's start with the principle that M&A is an entirely misleading term for probably about half the world. So for context, over half of the world's M&A is in or from the US, just massively weighted from the US, which means about half the M&A is not there. M&A stands for mergers and acquisitions. In reality, mergers are few and far between other than in the US. So in my career, I worked on very few of them. Mergers are effectively a function of essentially tax optimization, but it's when people are either buying a company, selling a company, or making an investment in or divesting of an interest in.
And those people could be investment funds, they could be corporations, they could be very, very rich individuals.
Absolutely. I think we would break down the world into probably two main sort of hemispheres, so to speak. You've got the people who are investing, and you've got the people who are supporting those investments. Yeah. Within the investments sort of hemisphere, you then can break that down into two main components. You have strategics or corporates, companies who day-to-day do other stuff. They make toothpaste, cars, build stuff, like whatever it is, a technology company. Could be anything, right? A company that does buying and selling companies is not their main business, right? So within corporates or strategic acquirers, you would then typically have a team, an M&A team within those companies if they do enough of it. That would usually be called a corporate development or business development or M&A team. So corporate or strategic investors is on the one hand. The other hand is what you would call typically financial sponsors, people who, for these purposes, don't have a primary business other than to buy or sell or invest in companies or businesses. Within that, you would typically have private equity. They are built to make these sorts of investments. You have other sort of institutional investors like sovereign wealth funds, pension funds, endowment funds, family offices, high net worth individuals, and so on. So people who are making decisions for a financial return, that's sort of on the one hand, so financial sponsors writ large, and on the other hand, corporates or strategic investors. So that's sort of on the one side of the equation. On the other side of the equation, you've got all the advisors and you've got all of the sort of service providers who support that activity. What does that look like? Probably the largest breadth of people in that space are going to be people who undertake a process called due diligence. Due diligence is the process of trying to understand before you make an investment decision or sometimes a disposal, what it is you're getting into, right? So that can be literally millions of dollars, sometimes, over $10 million of due diligence on the larger and more complicated transactions, where people are essentially helping the investors understand what is in the business that they're acquiring. What does that look like? Traditionally, it's financial diligence, so trying to understand the financial health of the company and the prospects, tax diligence, legal diligence, commercial diligence, and one of the key components of our sort of thesis is all of the other work streams, which is these days ESG, so environmental, social, governance, technology, IP, real estate, HR, culture, cyber, like you name it. People are now undertaking all of these this analysis because you're investing such large sums. You essentially have a principle: if you don't sort of look before you leap, then in principle that's your risk as an investor. So think of it as investors on the one hand, all the other service providers on the other hand are advisors, and huge industry, trillions of dollars a year.
Does the law firm have their own due diligence team, or is this a company? Is this a business? People that just do due diligence?
Bit of both. So you have a firm like the firm that I was in, which is called Freshfields. A huge component of the M&A practice, a large proportion of the revenue would be from due diligence. That's the same for any of the large, medium, small, or anyone who advises on M&A. You have teams who do that. You also have small boutiques who all they do is due diligence, whether in legal or in HR or culture or ESG or cyber. So you have kind of a mix and match approach.
I gotcha.
And within the due diligence practice, can you maybe break that down a little bit further? What is, like, practically, what happens in a due diligence?
I want to know about the culture due diligence, because that's like, is that just someone sitting in the office? Is it like, how do you gauge that?
Yeah. So
are they one-on-one interviews with workers, or?
So I can go down any number of these rabbit holes for days. So let's start with culture due diligence, because it's a great question. So we've actually worked with some really cool technology companies that are doing some awesome stuff in this space as well. So culture diligence is usually pretty critical, where one large-ish organization is absorbing another part of or another large business, and essentially a whole bunch of people, because those people have been doing things in a particular way. Yep. You now smash them together with another group of people who've possibly been doing things in a very different way, and that alone can have a massive impact on the success or otherwise of an acquisition or a merger, right? So how you go about doing that, some of it is sort of interviews. So it can be like one-on-one interviews with people. One of the cool products, and there's a few of these in the market, but one of the companies that we've worked with does a whole bunch of employee sentiment analysis. So what that means is they go onto public forums, whether that's a Glassdoor, some of the social media, whether it could be any number of these other platforms, and they basically scrape a whole bunch of data points of people talking about the company that they work in, and then essentially amalgamate that, have a few algorithms that process that, and then come up with sort of analysis. That stuff's really cool. So you can essentially now do culture diligence using AI based on publicly available data. And there's a few different vendors who do that stuff, but that's kind of cool. So it's either very manual or these days increasingly sort of technology. And Ahmed, your question was?
So the question was diligence, right?
Yeah.
I mean, culture diligence, I think, is a very niche part of the process. But, a big part of diligence is, for instance, commercial due diligence or legal due diligence.
Yeah.
Right? And then there's financial due diligence.
Of course. I think they're all super important too.
So when you're going to buy, when you're going to make an investment decision, you have to make it based on certain criteria, right? You want to make sure that the company you're buying, you're using a lot of shareholders' money, right? And you need to make sure you can blame someone else if something's not right. So very basically, what is due diligence?
It's kind of interesting because we talk about due diligence, also referred to as DD by most of the people in the industry. What does it mean, right? It's kind of the question. And the clue's kind of in the name. Due diligent. Are you being duly diligent before you make your investment, right? In this instance. I mean, due diligence, if you were to Google it, you'll probably find a bunch of vendors doing like KYC due diligence for people, like a bunch of solutions. So due diligence has a whole bunch of different connotations, but in the context of M&A, it's essentially, are you being duly diligent before you make your investment? Now, what does that look like? Broadly speaking, and particularly when we get into the context of innovation and technology in this space, if I say that we are working as a technology solution in M&A, people's minds immediately go to one part of the process. So, and our view is that that's only a tiny proportion of what's happening. So to explain what I mean by that, due diligence, we think of as a good way to sort of describe it is much like the extractives industries, so mining, oil and gas, etc. So we think of it as a three-stage process like you see in those industries: upstream, midstream, downstream. So upstream is excavation, exploration, getting the stuff up out of the ground, right? In the context of due diligence, that is reviewing a bunch of stuff, doing some analysis, and identifying things that are either risks or opportunities. And I think it's important to contextualize that diligence isn't only about problem spotting and finding risks, it's also about being able to find opportunities, because opportunities help you then justify valuations.
Give us an example.
So let's take financial due diligence. It will be reviewing available financial information, so financial statements. Usually you want audited financial statements, not always available. Usually there will be some management accounts that will be in there, and you will be looking to do, one of the sort of core components of that is something called QOE, which is the quality of earnings, which is, we can see that the EBITDA, or, essentially the profitability of a business over an historic period and projected forwards has been X. Can we justify, do we really believe that the EBITDA, for example, is 10, 50, 100, whatever the number is, or is a bunch of that actually non-recurring? So a lot of the way that you value a business, as you guys will know, is people find sort of one of the sort of most rudimentary ways or most common ways is, take the EBITDA, take the profitability essentially, and multiply it by something. Right, so we're going to take the EBITDA of 10 million and apply a 6 or 10 multiple. The multiple that you apply is typically a function of growth and value, and what you are multiplying, i.e. the EBITDA, you want to basically be able to project forward. If I'm going to own this business, how much money and profit is it essentially going to spit out going forwards? So financial due diligence, a large component of that is, what are one-offs? What's non-recurring? You've told me your EBITDA is $10 million, but actually you had a one-off where you sold $1 million, you had a massive contract that will never come back again. So actually, I can't really multiply that by 10 to achieve my value, right? Also, are there a bunch of liabilities on the balance sheet, right? So that's sort of the financial diligence.
Right.
Legal diligence will often be things like, okay, first of all, basics like who owns the business, who owns the shares, who owns the key assets, whether that's physical assets, buildings, whether that's intellectual property and intangible assets like patents, trademarks, brands, design, sort of trade secrets, that kind of stuff. It is, are the employees properly compensated? Are the taxes paid? Examples are, large companies where people sort of structure the contracts with businesses as contractors, meaning that they don't have to have all of the reserves for end of service gratuity in this part of the world, or pensions liabilities, or direct payments to tax. All of these things can have an impact on what you own.
Yeah.
So that stuff. Are people suing the business? Are you bringing claims against third parties?
That's sort of legal and financial.
Legal, financial.
And then you mentioned upstream, midstream, and downstream.
So upstream is basically what I just described as the process of undertaking that review and or analysis across each of these industries, right? So what typically happens is people review a bunch of stuff, right? What do they review? They review usually documents and data that has been made available to them by the seller or the target company, usually in a data room. So a data room, like Ahmed, you'll remember this back in the day, this was probably the greatest innovation in M&A that's taken place in the last 20 years. Laughably, it's file storage, a data room.
Exactly. So data room is basically, early data rooms were literally of a basement.
Yeah, a room.
A room full of documents,
Yep.
right? Literally hard documents that the lawyers and the bankers would come in and check.
Oh, wow.
And then they wouldn't be able to take anything out. There was no photocopying, nothing. You just have a look and then you leave. Now in data rooms now,
NDAs, digital,
Yeah, everything is digital,
Yeah,
right?
yeah, yeah.
So now you have one of these, what are called virtual data rooms.
Yeah.
And I think virtual data rooms started popping up maybe in the early 2000s.
97.
97.
There you go.
Right.
The first virtual data room on record was in
And
97.
then you'd basically be able to upload these documents onto a site. But the whole, within an M&A process, commercial sensitivity, legal sensitivity is very, very important. What you don't want is a document that you put on the web, effectively,
Right.
being able to be downloaded and used by competitors, right? There are a lot of competitive processes, for instance, where someone would be uploading a document into a data room, and then basically a competitor saying, "Oh, we're going to buy you." They go into the document, they go into the VDR. So we're interested in acquiring you, right? We go into the virtual data room, and they download all the very sensitive trade secrets. And they say, "Actually, you know what?
I'm good.
I'm good."
Yeah.
Right.
Yeah.
So a VDR is there to stop that process, right? So you'd have things like printing rights. You won't be able to take screenshots.
Yeah.
You can't download certain documents, or if you do, they're watermarked, right? So it's to control the flow of information effectively. That's what a VDR does.
Yeah, in simple terms, it's file storage with restrictions. And that's pretty much when you talk about technology in the M&A space that is habitually used on a deal, it's started to change now, but we would often get questions, are you a VDR? It's like, we have a data room, but that's not what we do, right? So in upstream, to answer your specific question, documents will usually be added to a data room, usually these days a file storage, so virtual data room. People would review that data, but it's not only the stuff that's in the data room. It could be market analysis, it could be interviews, it could be AI of public data, AI sort of analysis of public data. It could be any number of things. But that review process, what then happens, what people typically do is they create a report or an output. So each of those teams will create an output. Think of that as a due diligence report, DD report. Those things are typically, if you would see them, they are, if I was to characterize them, they are big, they're boring, they're hard to read, they're not usually read cover to cover. but you've paid a huge amount for them. So they're kind of, we often describe it as a placebo effect of the thud that you get when it lands on the desk. Kind of, there's almost this principle of the bigger the better. But most people don't read this. What it really usually comprises is a pretty front cover, an executive summary, which summarizes the key findings, and then a whole bunch of stuff dumped in the back that people don't usually pick up and read unless and until there's a problem. Then at the back of that, there's a scope that says what we reviewed. There's limitations on liability that basically say you can't, there's not much you can do if things go wrong. And that's kind of how all these things look. So on a typical deal, the upstream process is undertake a review, create an output, and that output is not user-friendly is our general presumption with this stuff. And you can see on heat maps that people just don't read much beyond the executive summary, if even that in its entirety. And what you end up with is a series of these standalone big outputs. So what that means is the people who are required to act on that have now got to somehow piece together the story from 3, 5, 10, sometimes 15, 20 different outputs from teams and go, right, based on this, I now need to make certain decisions. And we think of that as the midstream and the downstream. So you've undertaken the review, that's upstream, find the issues, but what happens next? So what? What next?
Right.
Which is, let's aggregate it, let's process it, and let's figure out what to do. What are they doing with that data? To summarize, they're doing 4 things. They need to work out what impacts the financial model or valuation. So is there anything in this analysis that changes my perception on the value of what we're buying or how much we can want to bid for it? How much do we, what happens in terms of how we get the deal done as a result of this? Do we need to structure the deal differently? What are we doing in relation to it? Third thing is, what impacts the terms, the contract that we're writing to actually close the deal? And then fourth, how are we building the plan for what we do with it, integration or essentially value creation, having made the investment. So you're trying to take this huge corpus of data and then really answer those 4 questions.
So in 1 minute,
Yeah.
what exact pain in this M&A due diligence process is single source solving?
Pretty much what I just described. So we think of, we're essentially providing the midstream and downstream for due diligence. So we love due diligence outputs. We think it's awesome. The more work streams, the more unuser-friendly these outputs are, which they are consistently. Somebody has to make decisions as to what next, so what and what next on all of this data. So we are the midstream and downstream. So we essentially aggregate all of the outputs from due diligence. We are a means of reporting on those findings, and then we help teams figure out what impacts the financial model, what impacts the structure and execution, what impacts transaction docs, and how you then manage the business going forwards. That's where we play. Put it all in one place, i.e. create a single source of truth. CISO is just an abbreviation of single source, so our product suite is called the CISO suite. Our cornerstone sort of flagship product is CISO Diligence. We help people move from diligence to execution, i.e. getting the deal done, and then from getting the deal done into integrating it or creating value.
So from a company like standpoint, when they're looking to be acquired or go into a merger, whatever it is, how often do companies pump up their numbers that are completely different through the due diligence process? Is it normal? Is it standard? Are people usually close, or is it like way off?
Everyone tries to make themselves look as pretty as possible,
Yeah,
right?
of course.
So for sure, there's a huge degree of skepticism, right? If you're selling, why should I be buying? Why should I be attributing this value to it? Now, one of the great sort of counterweights to that is to have a competitive process. What that means is I'm not just trying to sell my business to you. What I'm trying to do is find a number of people who are interested in buying my business, and then we try and create some what's called competitive tension where you guys are both trying to bid and I'm trying to get the price up. So that's kind of a fairly standard way, particularly for any mid to large cap deals in the US and Europe, to sort of increase the value. But yeah, for sure, huge degree of skepticism. And on that basis, that's one of the reasons that due diligence takes place.
So let me ask another question, and that's how your product, how single source will disrupt the industry. Now, a big focus of this podcast is to look at how the world will change, right? Is it that we don't need law firms anymore? Is it that we don't need these due diligence? You mentioned about these due diligence service providers. Second question, how does AI fit into what you're doing? And how will AI contribute to that disruption?
Good question. So I guess to answer the first one, how are we disrupting things? What is the impact of that? What we are doing is creating greater efficiency. We're helping people process more data and get to the outcomes quicker, more efficiently, and helping people make better decisions, really. What does that mean? It means that depending on the role, so most people in an M&A context play a number of different roles. We are not going to be disrupting, i.e. displacing any of the incumbent players anytime soon, certainly not in terms of the due diligence process. We think of that as the upstream process, just again for context. That will continue. That is being disrupted in and of itself. So
how is that being disrupted?
That is being disrupted in principle. And so when I say that we're in the sort of due diligence or M&A space and there's technology, people immediately think of the following, which is AI can review data and create outputs. And there are a ton of solutions out there from, highly capitalized, like billions of dollars to startups that are basically biting off different parts of this process, which is reviewing data, whether that is, language, so contracts, stuff that's in the public domain, whether it's reviewing financial data. Mm-hmm. There's a whole bunch of technology which is basically replacing or enhancing, supporting the human. So now, when we think of upstream due diligence, 5 years ago, probably 99% of that would have been humans reviewing stuff, creating outputs. Now, the proportion of AI or machines undertaking some of that process is only going to increase. So today, I don't know what the numbers would be. If I had to guess, I'd probably say about 10% is now machines. Maybe I'm understating that, but that's only going to increase. So that is things like the sort of the classic example, and legal tech is a great example of where you've seen the company get to 100 million of ARR quickest in the SaaS space. A company called Harvey has done that. And one of the things that they do, along with other players in this space, is they can assist with contract review. There's been this technology has existed for way over 10 years, but it has the underlying technology itself has changed. So LLMs have changed the game in that stuff, and essentially that is reviewing a whole slew of data and creating outputs. A classic example is, I am buying a company that has, 50 leases, 100 leases, 1,000 leases, 1,000 customers, 500 employees. I can put in all of the contracts, so all of the lease agreements, or I can put in all of the customer contracts or supplier contracts, and I can create summaries basically in a few minutes. And that's pretty cool. So that part of the process there's disruption already afoot. And as I said, the proportion of that work being undertaken by machines is only going to increase over time.
So in about 5 years from now, right, what is the legal profession going to look like? Because, as you said, LLMs have been the best thing, the most disruptive thing that have ever happened in the space. Now, I have my own views around this, and I think the legal profession is under threat. Right, because of LLMs, not just because of you're mentioning from a diligence. What you do is from a diligence standpoint, right? You review, so diligence is reviewing, but also drafting.
Yeah, absolutely. So I think when people talk legal tech, somebody like me, I can be very myopic because I exist in a world of M&A. That's all we think about, focus on. So if I'm commenting on sort of the legal industry, it can be people who are sort of fighting parking tickets. It can be people who are having, family disputes. It can, divorce, custody, blah, blah, blah. in the context of M&A, sort of big law, so to speak, what does that look like? Well, the traditional model, as most people will be aware, is people charging by the hour, right? So that means, how do I measure what I'm going to charge as a law firm? I measure based on the time it takes me or my team to do something, and I basically multiply that time by an hourly rate. So how do you value that? Well, it's time spent multiplied by hourly rate and then probably a negotiation at the end. That, if things take less time, that model is under threat. Even if you're able to deliver the same output at the end of the day, I want a law firm to provide some kind of analysis or view on what we're buying or investing in. Can you charge by the hour? If it takes 10 hours rather than 1,000 hours, what happens to the revenue and profitability of that firm?
Right. And then there's the whole rise of AI native law firms. And you've seen a few, I think, in the UK.
Yeah.
That have. I mean, not just in the UK, the US as well. There's been a couple.
And we're working in that space as well, which is really cool. So we're working with some folk and supporting people who are sort of moving into that space, because the sort of the AI workflow there, it is going to change things. But really, so the biggest disruption, what people have been talking about for decades, if not centuries, if I was to hazard a guess, is how can you justify paying somebody based on the time spent, right? But that applies in all sorts of industries, the medical industry, fixing cars, like it could be in anything. But if you were to, position it next to your old world, Ahmed, of investment banking, right? And we've had this discussion, that is typically a model where you don't charge based on time spent, you charge based on the value of the outcome.
Yeah.
We've successfully made an investment, we've successfully sold something, successfully raised a bunch of money, off the back of which the typical sort of investment banking approach is a proportion of the value, so X%. Now, within the legal profession, I think it's inevitable that there will be more value-based model, which is going to have a material impact on the number of people you hire. So your costs are going to presumably decrease unless the cost of technology simply just is substituted for the cost of humans, which doesn't make sense in reality. I think you are going to see a change in the tasks that the humans do. And one of the biggest challenges, not just to the legal industry, but to any industry, is if I can replace some of the more junior tasks with basic AI or agentic workflow of some description, how do you ever have mid-level and senior folk who haven't learnt the ropes as juniors? That's that sort of apprenticeship model I was talking about. If people aren't learning from the start, how do they get good as seniors?
That's a very good point, because I think, a lot of these AI. I mean, we're at a very nascent point, I think, in the whole industry, and both you and I have 15, 20 years in the industry where we've seen things from a very basic level, right? The big problem, I think, as you said, is that the tech within these big firms hasn't really caught up with the tech that's out there now from an enterprise grade perspective. And the reason for that is because of the information flow has to be tightly controlled, right? If you could get a whole bunch of lawsuits, and we've seen this happen, in a bank when one investor finds out something that the other that was meant to be secret for another investor, right? That's why we have this concept of Chinese walls, right? And it's a bit of a ramble, right? But where I'm trying to get to is, with AI, I feel that a lot of these big firms will still exist, but they will not be hiring anywhere near the number of people that they're currently hiring. So, your typical sort of Wall Street career progression is going to come not from people who are, Ivy League schools, who come in through the analyst, associate, VP route, but they're going to be more trained in AI.
I think it's going to be both sides, because you have those people trained in AI. But I think, tech is the biggest disruption from people that have done things that have always worked. They don't want to change, right? But I think if you're using AI and doing a value-based compensation, and you're saving costs by not hiring people and everything, I think this will open up a lot of eyes to traditional companies and be like, hey, we're missing out on a lot of revenue. Because money talks in business.
Right.
Right? So I think that'll be changed. I don't think you're going to have to wait like on another generation to learn to change the system. I think when people see that increase of revenue and what you're working on, what people are doing, I think people are going to jump on board.
But are you going to get a lot of, I guess, AI native out of this, right? If you do something really well, which you clearly are, there's going to be a lot of people copying you.
Yeah,
Right.
I hope so.
You don't hope so.
No, we hope so.
Oh,
we
right.
hope so.
Okay.
Yeah, look, being the first mover in a space comes with great opportunity, the sort of the so-called blue ocean.
Right.
But also,
But you gotta create your moat.
Yeah, but also explaining what you are and how you're different. Like, it's kind of sometimes easier to say, well, we're like X but faster. We're like Y but cheaper, or we're battling with the status quo, right? So we have to explain and we have to, walk people through the value proposition, which just takes a little bit of time, right? So actually, if people are allocating budget to our world of doing things, that's great. Then we're fighting for market share rather than a line item at all.
Yeah.
So in that sense, having, being a first mover in a space comes with its challenges. But to your point about sort of AI natives and what do the people acting in this space look like, I think it's going to be a combination of domain experts, as they always have been. But if the domain experts don't have the ability to use the tools available to them, then they will be left behind.
Yeah.
For sure. There's no doubt about that. The question that we sort of debate quite a lot with different players in this space is where you've got specialists, let's say an investment banker, a lawyer, a tax specialist. Are you going to have people who come up through a traditional, learn the domain route? So I learn all the tax code in jurisdiction X and I'm an expert on that. And then I've got some tech guys who can support me. And therefore, to win in this space, it is a combination of, a technical technician as a sort of domain and a technology technician coming together. And that's the sweet spot, probably. But I think the people who really win in this space, the people who understand the technology and what it can unlock for them. And that's where I think we're in such a cool space right now, because you're seeing the younger generations drive what is happening next rather than the senior guys dictating what is coming next. And I think that is probably the single biggest change is people are using this technology. I mean, I ask a question a lot. It's like, what are you using in your day-to-day lives today that you weren't using 12 months ago? And most people can list a whole bunch of things. Okay, now answer that question in terms of what you're using in your job that you weren't using 12 months ago. And in our space, there's very little. It's usually ChatGPT.
Right.
Right.
Yeah.
And so there's just so much headroom for innovation in that space.
So that gets me to another question, which is the tech stack
Yeah.
that will start to dominate the service industries, the due diligence industries. Let's just call it the due diligence industry,
Yeah.
right? And we talk about AI, but AI, as we know, is a massive world, right? It's not just ChatGPT. It's agentic AI. It's lots of different things, machine learning. So, posing that question to you, Rob, what does the world look like in 3 years, and what tech stacks dominate, and how will they influence and drive?
So I think it depends on the stakeholder, whether you're talking about the investors, the advisors, but maybe just to try and simplify this, I think one of the key the key ingredient for AI, let's just call it technology, right? How do you use the latest technology to deliver greater outcomes, better outcomes, whether that's more value, time, however you want to measure it? One of the key ingredients, or probably the single greatest ingredient, is the requisite data. And as we know, and we speak to large enterprises, small enterprises all the time, most people's data is in various states of disrepair, right? Yep. It's kind of all over the place. One of the cool things with the latest versions of AI, in particular the sort of the LLMs, is that you can get better outputs from unstructured data. But one of the most misleading things with that is context. So most people
right.
use a lot of the latest technology to do one of two things. It's essentially search or querying, right? So it's kind of like, have I seen this before? What's the answer to this, right? So it's either in the public domain, we all use it, ChatGPT, you know, what is the answer to X? Have we encountered Y? Whatever it may be. In an enterprise or business context, it is, what is the answer to this based on what we've done historically, right?
And that brings in, you know, the whole reliability of AI.
Absolutely, 100%.
Right? Generative AI is, and even LLMs are prone to hallucination.
They will, I think, as best I understand it, they will always have that risk because they are probabilistic rather than deterministic, meaning that they are essentially guessing. And the guesses are only going to get better, but the guesses are never going to be 100%, right? So that's the challenge with that. So you've got you're either kind of looking for answers, searching for things, or you're creating outputs. I want you to write an email. I want you to write a letter, a contract, whatever it is. So it's kind of those two sides of the equation. Now, in either of those circumstances, in either of those use cases, you are trying to generate either an answer or a product, an output from that based on a corpus of data. Yep. Like in the public domain, it's ChatGPT. It can be on literally anything that's kind of out there in the internet or the corpus of data that it's trained on. In an enterprise context, if you are an advisor or you're an investor, it is really what you want to do. If you're a private equity house and you're like trying to raise capital from third parties, one of the things you want to do is say, we're better at this than anyone else. Our returns are better, safer, whatever it may be. So invest with us. Well, how do you do that? Your secret sauce is your experience, the experience of the people that are there, but also the experience of the people that are no longer there. And that's the stuff that's gone wrong and the stuff that's gone right. So you want to have access to that data. A lot of that data is not easily accessible today. So when we talk about what the future looks like, one of the, I think, is almost criminal when we sort of started this journey on the single source or CISO side of the equation, it was people are spending hundreds of thousands, bare minimum, usually millions of dollars on every one of their M&A deals. They're getting all these diligence reports. They're getting these outputs. Are they valuable? Is the data in there valuable? Well,
can they place reliance?
Well, often they've paid for it, so usually the investor can, to some degree, subject to the limitations, subject to the scope.
But from an AI perspective, if generative AI or an LLM was used in any of this diligence, if I'm an investor, can I place reliance on that, first of all, legally, right? But also, if the data is wrong or hallucinated by the AI, who do I sue?
Yeah. So that raises like a ton of questions that we spend a lot of time looking at. And one way to think about this is through the lens of the insurance industry. So there's a whole world of M&A insurance. That's two parts. Brokers, so people who find the deals and then place the risk, with underwriters. So they're the insurers. So kind of they are the guys who you would often think of as the people who may take the most conservative view on any risk. I speak to a lot. We're doing a lot of work in AI and innovation in the M&A insurance space. And I asked the question, first of all, and I've asked this of underwriters and brokers all around the world, the biggest underwriters, the most prolific brokers and so on, how much AI have you seen in the data that you are receiving to make your assessments? Little to nothing.
Right.
So number one, it's obfuscate. But we know people are using AI, but it's not clearly disclosed in the diligence report. So people are using it. So what does that mean? It means, in large part, they are using AI to undertake a review, but with, as the name Copilot intimates, they are having humans in the loop and checking that. So that means, as a service provider, when you talk about reliance and the ability to sue or basically rely on the data you've been provided, you're using the machine to serve up an answer, to do the analysis, and then you've got humans checking it to varying degrees, right? So I think in the foreseeable future, that will continue, which is humans in the loop. As the technology gets better and as we evolve, there'll be less, the sort of human fingerprints on things will reduce, and that question will get more pronounced. So first of all, it's humans are going to be signing off on this, otherwise it's reckless, and people are using a lot of the information as kind of like a junior. It's like, give me your answer, and then we're going to check it and satisfy ourselves as to the outcome.
But but you know, 10 years ago or even now, there's, in a typical deal team, right? There's probably 4 or 5 people checking it. from a junior level to a mid-level to sort of a junior mid-level to a senior level to a managing director to a partner, right? There's different people checking it along the way. Now, 3 years from now, and this comes to the jobs thing, because I think this is going to absolutely decimate the financial services industry, especially the legal profession. I mean, that's my view. You mentioned there's going to be fewer fingerprints on things, meaning you probably just need a partner to sign off. A partner, I mean, you're seeing it already in consulting, right? Generative AI, I mean, people have their views on what consultants actually do. But now, before you used to have teams of analysts and associates getting paid a lot of money to basically produce slide decks that can now be produced by a couple of prompts by a senior partner, meaning you don't need all these people. And this is where I think the whole industry is screwed.
Yeah, look, I think that's definitely the extreme case. I guess to ask a question, sort of to go back to a previous point, how do you get the partner?
That's another thing.
Right. Yeah. How do you get to a partner how do you get to the person who's got the requisite experience and authority to sign off on that? So I think it will always require sort of a tiered approach. But there will be examples of people who have zero humans in the loop. And if you are, as an investor, you're like, I'm willing to take the punt on the technology because actually the error rate in technology is demonstrably lower than the error rate in humans.
Exactly.
Right? So there will be people who say, I think there will also be people who don't want to take that risk because why? And what you will see is it kind of goes back to the start with the term due diligence. Am I being duly diligent? Well, that's kind of a relative term, right? What are all my peers doing? Right?
Yeah, exactly.
Are they using humans? So that's the other piece. You've got, a lot of people aren't willing to move to a pure technological answer because A, it's incredibly disruptive and people haven't yet built up that trust. But, the other part of it is, what are my peers doing? Am I actually discharging my fiduciary duties to my shareholders, to my investors, to my fellow partners, if actually something goes wrong and I get hauled in front of a disciplinary tribunal, a court, whatever it is, and they're like, nobody else in the industry is doing this, that was reckless, right? Mm-hmm. It's all going to be judged in hindsight, right?
Yeah.
But, going back to the point about what does the tech stack look like, where does this go? I think one of the key components is an organization's data.
Yeah.
So being able to then harness your own organization's data, what you've experienced, the decisions you've made, that's where there is a degree of sort of a unique perspective and value that organizations can continue to hold. And therefore it is, I want to go to organization X because they've got the same tech stack as everyone else, but their experience and data and their own interpretation and use of it is unique relative to that organization. So I still think that even if all the tools are democratized and everyone can have LLMs, the unique aspect is going to be the data, and that's where there's going to be a lot of value because people can sell it. The New York Times selling their training data to OpenAI for ChatGPT as an example, right? That's where there's going to be another asset class unlocked, which is the data that you can then use as a feedstock because anyone's going to have an LLM. Everyone's already got them in their pockets, right?
So what you're saying is that the jobs won't go, they'll just be different.
A bunch of jobs will go. A bunch of jobs will be different, for sure.
Yeah. Okay, just sort of a few closers here. One feature you thought about single source, your journey as a tech founder now, you started your life as a lawyer. You had a brief stint in football.
Yeah.
And can we talk about that? Or
Yeah, sure.
Yeah. So, you have a very, very diverse background, which is really very unique. Like you don't see this, right?
Yeah.
But then at the same time, you became a tech founder. And so the way you think about problems is going to be very different now to when you were in the industry as a lawyer. So one thing that people who come from big places or big industries have when they get into tech is that they don't know how to fail fast, right? They don't understand failure, because failure is, you can never fail. The corporate culture is very different from a startup culture. So I wanted to sort of go through failure a little bit, and maybe you can, one question I always have is one feature or one thing about single source in your journey. It could be about anything, single source or anything, but that you thought would be huge, but fell flat on its face, or you couldn't execute on, and why?
So,
and what you learned from it.
So it's opens up a whole world of sort of observation. So maybe the most stark way to think about it is, as an advisor, I was perceived to be, so-called expert in a particular area. People came to me and my team and our firm for advice. They kind of paid for my judgment. They kind of hoped I was right, and they would pay, a huge amount of money per hour for that. So I better be right, or I better be, convincing, right? Now, as a founder, I am wrong 95% of the time. And you've got, exactly to your point, Ahmed, like you've got any ego that comes with being a highly paid professional that has a corpus of data and experience, chuck that away, use it for the feedstock for your innovation and inspiration and all of that stuff, but you cannot have an ego. You've got to assume that most of the things that you are trying to do are going to fail, and you are, one of the most challenging things when I describe what I do in my sort of world as a founder now is everything I do is pretty much a cliche, right? Everything I do, people have heard other founders doing it. There's very little that's unique in life as a founder. But one of the most challenging things I've experienced is you are always having to make stuff up. There's almost an infinite number of options on the table to do anything. And all of the options on the face of it could be good, bad, or equally, good or bad. And then once you've sort of gone through a process of agonizing or trying and failing or trying and winning or whatever it may be, you kind of have these moments of clarity. You have these kind of mini epiphanies like regularly, like, great, we've decided we're going to do X. And then you kind of want to share that. It's just a human experience. Oh, what a relief. We figured this out. And then if you explain that to anybody outside of what you're doing, you kind of get these blank looks. It's like, well, that was obvious. Well, yeah, I guess it was obvious, but so were the other 10 things that I ruled out. So I chose this particular obvious choice and ruled out these other 10 things that sounded obvious for the following reason. And you just got to continue, exactly as you say, fail fast. You've got to have the humility you kind of got to balance this conviction, because you've got to be able to sell your product at the end of the day. So you've got to have confidence. You've got to have unwavering belief in the direction of travel. But also you've got to be completely willing to be pushed off course and let the market dictate where you go. So, I mean, honestly, there are countless examples. Probably one of the greatest examples. We thought we would be able to generate greater momentum for change sooner. It's just way slower and harder than we thought. It is by far and away the hardest thing I've ever done, as you alluded to. I've done a lot of random stuff in my career to date, a lot of hard stuff, and this is by far and away the hardest, because you're inventing something, and then not only are you inventing it, you got to build a team to help.
You got to make it work. You got to fund it.
Yeah, you got to fund it. You got to build the technology. You've got to, sort out all the human issues around, dealing with, humans are difficult people to sell to buy to manage,
and doing something that's never been done before.
Absolutely.
Yeah, it's difficult.
It's hard.
Yeah, it is.
But it's great fun.
Yeah. But if you if building a company, I've noticed it's okay to fail. Like in the beginning, we would fail and I'd be like real stressed about it. But now if there's a failure, it's okay. We're building it ourselves. We'll do something else. Like it's not stressful anymore.
Yeah.
It does cost, time's the biggest one.
Time, but also self-care.
Yeah.
I think in working in big corporates, you neglect a lot of the self-care that you have to double down on as a founder. So, eating properly.
Yeah.
Right? Mental health is the first thing that goes as a founder. It's the hardest thing. And within that, eating properly, proper nutrition,
Yeah.
exercise, and I know I sound like a broken record, but ice baths, right?
Yeah.
They're, transformative. I don't want to sound like one of those typical sort of founders and talk about ice baths every 10 minutes.
Like with our founder, Umair, like
Yeah.
he works on a level that I cannot compete with. Like he's working all the time. And so like I'm always judged in a way that like, I feel like I'm not working enough because he's a machine. You know what I mean?
You have to be.
Yeah.
You have to be because the stress is so much more.
Yeah, it's insane.
As a founder. And I think that's one of, if you were to ask me that question, that would be the thing that keeps me going. And it's, to handle that stress, because the stress is amplified, at an exponential rate as a founder versus when you're in industry, right? It's a different type of stress.
Yeah.
But to do that, those are the things that I focus on.
Yeah, look, a lot of your decisions feel existential, right? If you get it wrong, you may no longer exist,
Yeah.
right? That's kind of the very, whereas if I'm in a big corporate environment and something goes wrong, maybe I'll lose my job, but I'll find another one because somebody else will hire, right? Unless it's totally egregious. But like, there's a safety net here. As a founder, right? Things can feel existential, so it makes a huge difference to the stress levels.
Sure. Or making one bad decision that costs you time.
Exactly. And you see, this good decision making is all based around your neurological state. People who have a stressed neurological state tend to make decisions based on a fight or flight response, which may not be the best decision for the medium or long term, right? And it may be too short term, right? Whereas I think if you look after your neurological state, the chances of the outcome of the decision that you make will always be better, right? And this is why like founders on podcasts, and I don't want to be one of those founders, talk a lot about like, intermittent fasting and all of that. That's why this stuff is really big.
Right.
It's because there's a lot more entrepreneurs now than there ever were. It's the way the world's moving, isn't it?
Especially coming from a background, like you said, where you feel like things aren't changing as fast as they should. You're trying to make quick decisions to make it happen, which may not be beneficial like you just talked about.
Yeah.
Exactly.
Exactly.
It's difficult.
Yeah, it's the hardest thing I've ever done.
So just to close things off, where is the world going to be? First of all, can you tell us a little bit more about Single Source? Maybe a couple of lines, website, etc.
Sure. So Single Source, as I said, we abbreviate it to CISO, SISO. Our URL is cisotechnologies.com. So that's probably the best way to find us, or Google CISO Diligence. We're on LinkedIn.
And where are you on your journey right now? I saw something on LinkedIn around $1 billion deal.
Yeah, so we've been going for 3 or 4 years now. Our clients include kind of all of the stakeholders that I've kind of touched on so far. So we've got large corporates. So we've got guys who've done tens of deals on our platform. We've got private equity investors on our platform. We have advisors who are using us as their native reporting solution, which is cool. And we've moved now into the transaction or M&A insurance space as well. So we have, the way we think of it is we've built a platform sort of end-to-end for M&A, which probably accounts for 80% of the use cases on an M&A deal for most of those stakeholders. And then we build AI applications to essentially customize the workflows for specific organizations. So we're going to just do more of the same in that sense. What you're referring to is a couple of weeks ago, I think it was now, we had the first $1 billion plus deal executed on our platform.
Amazing. Congrats.
Which for us, thank you, which for us was cool. It's great validation because we're doing something new, right? And doing something new, people are nervous. Well, you've got great sort of social proof validation if people are willing to use a platform like ours for something as large. I mean, even short of $1 billion, people are doing hundreds of millions of dollars of deals at a time on our platform. But yeah, $1 billion. It sounded cool. It was a cool milestone, and as you guys know, you kind of got to take your wins where you can get them.
Any win.
Exactly.
Any win's a win.
Exactly.
Build
Good.
a lot of confidence.
Exactly. Yeah, and it makes people feel good, right, internally as well. So yeah, it was definitely something worth celebrating and shouting about.
Fantastic. Any closing comments?
I think I'm good. I appreciate the conversation, and I don't come from this background, so I just was asking questions I was curious about, So, thank you for joining us and doing so well on camera. I feel like you've done this before.
Thanks. I hope I didn't use too much jargon.
No. I understood. You explained it well.
Yeah. So thanks a lot for coming on.
Thanks, guys. It's been fun. Much appreciated.
Yep.
Cheers.